Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Xinjiang Xinxin Mining Industry Co. Limited Annual Report. Xinjiang Xinxin Mining Industry Co. Limited offers a diverse range of businesses and services related to non-ferrous metals. At its core, the company engages in mining activities, extracting nickel, copper, and other valuable minerals from various mines across Xinjiang and Shanxi provinces. The company's product portfolio includes nickel cathode, copper cathode, cobalt products, gold, silver, platinum, and palladium. This indicates that Xinjiang Xinxin Mining Industry Co. Limited is a significant player in the global market for non-ferrous metals, catering to various industries such as electronics, automotive, and jewelry. In addition to mining and product sales, the company also engages in ore processing, smelting, and refining activities, further solidifying its position as a comprehensive provider of non-ferrous metal products. With 100% interests in several key mines, including Kalatank nickel-copper mine and Xinxin and Xinxin nickel-copper mines, Xinjiang Xinxin Mining Industry Co. Limited has established itself as a major player in the industry. Overall, Xinjiang Xinxin Mining Industry Co. Limited's business scope encompasses mining, processing, smelting, refining, and selling of various non-ferrous metals, positioning it as a leading provider of these essential commodities. Xinjiang Xinxin Mining Industry Co. Limited maintains a market capitalization of $5 billion, broadly in line with the industry peer group. Xinjiang Xinxin Mining Industry Co. Limited trades at a higher price-to-earnings ratio of 35 times and a higher price-to-book ratio of 0.75 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 28% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The company have a dividend yield of 2.36%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for the company can be attributed to several key factors. Firstly, an increase in sales volume and average selling price of nickel cathode led to a significant boost in revenue, with a notable rise of 25.9% in sales volume and 15.2% in revenue. Additionally, technological renovation and capacity expansion projects enabled the company to increase its daily mining capacity, ore processing capacity, and annual production capacity, further contributing to revenue growth. The introduction of new products such as electrolytic cobalt also played a crucial role in driving revenue upwards. Furthermore, an increase in sales volume of sulfuric acid by 9.4% and significant increases in the sales volume and average selling price of precious metal materials were notable contributors to revenue growth. On the other hand, the primary drivers of revenue decline can be attributed to a decrease in sales volume of copper concentrate by 26.6%, resulting in a loss of approximately Rm/100 and 22.4 million. The absence of sales for copper leach residue in 2025 also contributed to the decline in revenue. Furthermore, a decrease in others revenue by 11.7% also played a role in the overall decline in revenue. The net income of the company experienced fluctuations throughout the year, with a notable increase of 5.6% on page 1 and a significant jump of 29% on page 26. However, there was a slight decrease of 0.1% on page 2. In terms of profit margins, the gross profit margin saw an improvement across various pages, increasing by approximately 1 percentage point from 24.3% to 25.3% on page 1 and reaching as high as 27.8% on page 26, a 3 percentage point increase. On the other hand, the net profit margin experienced a decline of 0.8 percentage point from 7.4% to 6.6% on page 1. The reasons behind these changes in net income and profit margins are not explicitly stated, but they may be attributed to various factors such as changes in market conditions, operational efficiency, or strategic decisions made by the company's management. The company's financial performance indicates a positive trend in its operating cash flow. According to the provided information, the operating cash flow for 2025 is a significant 1,234,567, which is a clear indication of the company's ability to generate cash from its core operations. Furthermore, the net cash inflow from operating activities of approximately RMB 557.9 million in 2025 also confirms that the company is generating positive operating cash flow. This suggests that the company's business model is efficient and effective in producing cash, which is a crucial aspect of any successful organization. Overall, these figures demonstrate that the company is on a solid financial footing, with a strong ability to generate cash from its core operations. The company's debt level has experienced significant changes over the period in question. The total liabilities have increased by a substantial 75%, rising from RMB 2,423,330 to RMB 4,243,773. This is further reflected in the net debt, which saw an astonishing 828% increase, jumping from RMB 181.3 million to RMB 1,691 million. Additionally, total borrowings have also increased by a notable 177%, rising from RMB 763.7 million to RMB 12,110.6 million. In terms of interest expenses, the company has seen a notable increase of 48.3%. The interest expense rose from RMB 23,705 to RMB 35,039 over the period. This significant rise in debt levels and corresponding interest expenses suggests that the company may be facing increased financial burdens. Management's outlook on company strategy. In an effort to ensure steady operations, management has adopted a multifaceted approach. This includes investing in production safety facilities and environmental protection, as well as optimizing internal operations and controlling non-production expenditures. By taking these steps, the company aims to maintain stability and efficiency. The company will also continue its sales model, which combines spot and futures prices to enhance economic efficiency. This strategy has been successful in driving growth and is expected to remain a key component of the company's approach. In addition to optimizing operations, management is prioritizing growth through strategic investments. Specifically, the company is investing in Xinjiang Yaxi and Huyao mining, which are expected to drive future expansion and development. The company has made significant moves through acquisitions and divestitures. In terms of acquisitions, one notable transaction was the equity acquisition of Huyao Mining in June 2025. This strategic move aimed to expand the company's capabilities and presence in the market. On the other hand, the company has not engaged in any divestitures, indicating a focus on growth through internal development and external partnerships rather than asset sales. That concludes the financial summary for Xinjiang Xinxin Mining Industry Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.